Welcome to our weekly Forex forecast. My name is Jay Norris. I'm a trading instructor at Trading University. As always, we need to remind you trading involves risk of loss and is not suitable for all investors. First market we're going to cover is the Australian US dollar, Aussie USD. While technically you are in what we call a longer term sell zone here, technically short term we're still buying dips, and we highlighted that last weekend. Probably easier to show you the RTT ratio. There's the Aussie US dollar right there. You can see the 5 through 50 are all up. So that's a pretty bullish setup. You are in, however, secondary sell zone. So generally, I like to wait till you get to the top of that sell zone before that guy softens up, and you can see it's actually using that 50% retracement. You take that high, that low, that purple line is your 50% retracements. It's using that as support, and that's not surprising, and that's why we were still, as of last week, we were saying we're in the buy the dip camp. I'm still in the buy the dip camp really until that resistance. It shows it's going to hold resistance up there. You keep on doing what's working, right? Next market we're going to cover will be the Dollar Chief. Dollar Chief there itself in a band of resistance here. It's still buy the dip short term, similar situation until you actually get up to that resistance and it proves itself resistance. You had a bit of a shooting star on Friday. That's not that much of a concern for me as a short-term bull, just because it's Friday. Fridays tend to be counter-trend days as it is. It's not surprising that, the market slows down, backtracks a little bit on a Friday. So short-term, you're still in the buy the dip camp. However, longer-term, you can see that still that same pattern where you do have lower highs, lower low, lower high, lower low. This potentially just another lower high. So not a lot to get excited about from a bullish perspective here in the Aussie dollar. And, I tell you what, well, we'll show you the other markets first, but you can see that pattern to them all. And as a short-term trader, I like buying dips here, but longer term, it's awful hard to get excited for a long-term trend shift yet, for sure. And we'll see that in the other markets. Dollar index now, this is a completely different chart. Those two tend to move in similar directions. They tend to move in the same direction, but this is a really different chart. Technically, this is still a higher low, isn't it? The October low. So a different chart for sure. But here you see that same pattern. This is what we call RTT ratio. That's a very specific retracement level that the market had respected in the past. If you take this high right here, that low, this retracement here is identical to this high, to that low, that retracement. So this retracement of this move here is identical to that retracement there. And we often see that the RTT ratios, it's based on Dow theory. It's been around over 100 years. Pretty interesting level to focus on. And sure enough, you hit the brakes there. So, it's hard to get excited being a bull long term. However, if you can eclipse that level, if you can get a couple daily closes above that level, that's a different game. You're not going to get to that 81.5 until you get beyond that 80 level. So that's a big level. Here we'll highlight the RTT ratio a little bit easier to see it. I love the ratio because it's just the raw pattern. It's raw numbers. There you can see 5 to 25-day patterns are still up. I'm still buying dips as a short-term trader, but I'm definitely aware that guess where that market hit the brakes at, right at that 50-day RTT level. So that's going to be a level to watch for sure. I'm still a bull short-term. I'm definitely mindful that 80.80 is resistance and that you had an identical retracement here held big time there, and you're seeing the identical retracement they're holding so far. So you can only be a bull so long until the market hits resistance, and you have to see both sides of the market for sure. And we're looking at both sides of the dollar index right now. Next market, the euro. It's a similar situation, the mirror opposite of the dollar Swiss. Here's a big, there's your 50-day RTT level. Similar, the 50-day RTT level held. The bear RTT level held in the dollar. The bull hasn't been tested yet here in the euro. And here's, I've marked off past RTT levels. You can see how it held there. You couldn't close below it. Here you only held close below it once. That's why I always say I need two closes below it to take a move seriously. It's easy to think that RTT level is weakening and reversing there, but the fact is you couldn't get two closes above it. That green line is the identical retracement level here, and here it is again. So hasn't even got to it yet. So Yeah, I like working the short side short term in this market in the euro, no doubt about it. You have the majority of short term patterns down in the euro. I like seeing that whether I'm trading the 5 through 25 or I'm trading the 10 through 50. No matter which one I'm trading, the majority of patterns are down, right? You take any three consecutive patterns, trade with the majority of them. If I'm trading the 10 through 50, the majority are down, right? However, bam, you're right at that 50-day support, so or just above it. So, that's a big, big level in the euro. Oh, 136.40, 136.45. So that's a level to watch. Yeah, I like working the short side. I was telling my clients intraday last week, we teach in live markets. I'm like, hey, you got to be aggressive selling this market for sure, short term. The closer you get to that level, the less aggressive I become. On the other hand, if something changes in the marketplace and I get a couple closes below that level, that's a big, big level. That's a game changer for me. I'd love to see that, but it hasn't happened yet. You have to see both sides of a market, okay? Lose your opinion, not your money. You got to see both sides in this game. That in itself is a big, big edge. Next market, gold. Gold, someone said, you're always a bear on gold. I heard you saying there's support in the gold market. Well, I'm not always anything. I'm whatever the market tells me to be, and I know that you have a big a band of support here in the gold, and that's going to be significant. That's a 50-day support level in the gold. Here's what's kind of interesting about the gold. You shifted that very short term, there it is, you shifted that very short term 5-day pattern up. Now that's really not that significant because I take any three consecutive patterns and I just go along with the majority. No questions asked. If you take the 5 through 25 day, the majority of these three patterns is still down. If I take the 10 through 50, the majority of the patterns is still down, okay? So I'm not that bulled up on gold. Any long trade would be a counter trend trade here, but I'm watching it for sure. I respect the majority patterns bottom line, but if you could shift that 10-day, that's going to be really, really interesting to me. It's a little bit premature to talk about that because you're still a ways away from the 10-day. I don't even have that on that chart just yet. If something did happen there, I'd probably do a special video or something, pop it on YouTube for you if that 10-day were to shift, because that would be significant. So I'm watching gold. It's in a cool place. The 5 days up. And that 5 days is significant. In this day and age, believe me, that 5-day pattern, a lot of you guys may think that's short term, but no, it's a significant pattern, no doubt about it. Last market I want to cover, dollar yen. Here's a really interesting setup. I love this setup. Okay, most people are going to look at that chart and they're going to go, aha, you're at resistance. You had a big change of direction there. That's kind of bearish, isn't it? I'm telling you, it's not as bearish as it looks, okay? And here's where I love the ratio. Give me the raw patterns. As I say all the time, we tend to see what we want to see on a chart, but if you break it down in the raw patterns, there you go. Here's dollar yen. Look at all those patterns are bullish. If I'm trading the 5 through 25 day, no doubt I'm a buyer. If I'm trading the 10 through 50, no doubt I'm a buyer. You had a big change of direction there. You goosed it pretty good on the downside, but the 5-day pattern held bullish. There's that line here. You can see it a little bit better on the 4-hour chart. That's your 5-day RTT level right there. I smell a bear trap here. Now, sure, I could be wrong. If you start to close below that level, that's no problem. You could have a short-term shift here, and you could trade off and test the middle line of the Bollinger Band. However, if that line holds, you probably have some pretty good shorts trapped in here. You did no technical damage. The bottom line is, and you see it in the RTT ratio, you did no technical damage whatsoever on Friday. Yeah, you probably sucked some people in short. You probably stopped out some short-term longs, but from our perspective, you did no technical damage. Watch dollar yen. Hey, that'll do it for me. Always a pleasure to see you guys. Let me leave you with this one thought here. Once you realize there's nothing to do over 80% of the time, you're ready to move from analyst to trader. If you're in a big hurry to trade, you're behind the 8 ball. Okay, they're going to get you. You have to be patient in this game. For the most part, it's observing, and recognizing when the time does come to act. Hey, thank you so much. Always a pleasure, and we'll catch up with you guys next week.